What happens when the world's largest hedge fund suddenly dumps over $1.4 billion in Chinese stocks? Bridgewater didn't just trim, they wiped their portfolio clean. But why? In this video, we'll unpack what led to this dramatic move, what Ray Dalio's own principles say about it, and what lessons every investor must learn now. Stay till the end. We've got book recommendations and a roadmap for navigating this volatile global market. Bridgewater Associates was founded in 1975 by Ray Dalio, a visionary who combined economic models with deep philosophical principles. Today, Bridgewater manages over $100 billion in assets. They pioneered strategies like pure alpha and all-weather, built around diversification, risk parity, and macro trends. Their clients include governments, pension funds, and central banks. Dalio's book, Principles, Life and Work, explains the core idea. Don't let emotion drive decision-making. Use logic, data, and timeless truths. Bridgewater applies this to investing on a massive scale. In Q2 of 2025, Bridgewater sold all of its US-listed Chinese stocks, including 16 companies and 2 China-focused ETFs altogether, over $1.5 billion in value, gone. No hedging, no trimming, just exit. This was one of the boldest reallocations by any major fund this year. So, why would a globally diversified, macro-focused hedge fund walk away? Reason 1. Geopolitical risk. US-China tensions are rising. Tariffs, tech bans, data restrictions. Investing in Chinese stocks now carries policy risk. Reason 2. Regulatory crackdowns. Beijing has crushed its own tech giants with sudden regulations. One day it's booming, next day, blacklisted. Reason 3. Poor performance Chinese equities have underperformed badly compared to US tech. Bridgewater's flagship fund returned just 5.9% over 5 years. Investors want growth, and China hasn't delivered. Reason number 4. Strategic rotation. At the same time, Bridgewater increased exposure to US AI stocks like Nvidia, ARM, Microsoft, and Alphabet. From east to west, from risk to growth, from uncertainty to momentum. As Dalio puts it in Principles for Navigating Big Debt Crises, the biggest mistake investors make is to believe that what happened in the recent past will continue. This isn't just about China. It's a signal of capital rotation across the globe. Bridgewater is following the data. Chinese assets, cheap but unstable. US tech, expensive but dominant. Global capital is voting with its feet. Ray Dalio warned us in The Changing World Order. When trust in institutions fades and the rule of law weakens, capital flees. Bridgewater isn't abandoning China forever. They're acknowledging that right now it's not worth the risk. Here are 5 powerful takeaways. 1. Stay flexible. Even Bridgewater dropped its thesis when reality changed. 2. Diversification isn't enough. You must weigh geopolitical risk and regulatory transparency, not just returns. 3. Performance tells a story. If your portfolio isn't working, change it. Don't cling to loyalty. Macro matters. Study not just markets, but the world. Politics, debt cycles, tech shifts, these shape returns. 5. Think like a hedge fund. Bridgewater uses logic and data. You should too. Leave emotions out. If you want to think like Ray Dalio and understand moves like this, here are 5 essential reads. 1. Principles, life and work, mindset for decision-making and systems thinking. 2. Principles for navigating big debt crises. Understand global economic patterns and financial tipping points. 3. The Changing World Order. Why China, US, and the global power balance affects investing. 4. The Intelligent Investor by Benjamin Graham. The Timeless Foundation of Risk-Aware Investing. 5. Bridgewater's All-Weather Strategy. Learn how to build a portfolio that survives any cycle. Bridgewater didn't panic. They executed a principle-driven shift based on data and evolving global conditions. That's what smart investing looks like. So ask yourself, are you managing your money with emotion or with principles? Like, share, and subscribe for more deep dives. Comment below, should other investors follow Bridgewater and exit China too?